The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody, and happy Friday morning. Super Bowl weekend out there, and we got markets picking up pretty much where we've been this week, right? Tough week for the markets right now in negative action. S&P's off 18 points to begin the Friday session. We were as low as 4,060. So you were as low, what's that, about 30 points in the S&P lower. Right now, we're negative by about 0.5%. Quite a day yesterday, man. You're talking about basically 100 points from where we were about 24 hours ago in the S&P 500s. NASDAQ 100. 12,322. You're off by about 0.8%. We got the Dow up, not up, everything in the red. Dow negative 0.3%. You get the Russell off by 0.4%. Got to talk about crude, man. Maybe be the story of the day. Russia, let's jump to the headline. Why not? Russia retaliates for sanctions by announcing an oil output cut. March production to be cut by 500,000 barrels a day. Crude, as you'd expect it, when you decrease supply, folks, if you understand economics, right? You got your supply curve, you get your demand curve. You decrease that supply curve, what does it mean? It means where supply equals demand is at a higher price. Econ 101. Nonetheless, you got prices driving higher. Russia plans to cut its oil output by 500,000 barrels a day next month, following through on a threat to retaliate against the Western energy sanctions and sending oil prices sharply higher. Now, the move threatens to renew turmoil, as expected, though, which had so far taken disruption to Russian supplies in stride. It further tightens supply constraints from OPEC, which Saudi Arabia had already led into a 2 million barrel a day production cut last year in an effort to buoy prices. And yeah, as you'd expect, man, we got crude trading higher. Russia's reduction is equivalent to about 5% of its January output. So that's what they've pulled back in terms of their production, the percentage of their production, 500,000 barrels a day, about 5% of the output that they had in January. And yeah, they've hinted at this move as sanctions have come down the line. Not surprising. And there's your number. Russia's oil output has rebounded after the spring sanction shock, and you're at about 11 million barrels right now. So they're going to trim about 500,000 barrels off that. Yeah, and as expected, man, we got crude spiking. You're all the way up to 80.33. We've backed off a bit, all things considered, somewhat priced in when you look at it. You're only talking about $1 to the upside, man. You give up some of that action in the crude market. We take a look at this thing on a daily basis. Let's even go back on a weekly. And you see, folks, let's extend that one to the right. I mean, this is just a line of simple, consolidation here between about $70 and $80. Pretty remarkable. You got to go back to November 14th, folks. What's that? December, January, February. You're talking about 3 months. We've had crude shopping around between $70 and $80 this morning. We're nearing that $80 mark. Yeah, all things considered, we'll see where we go. But crude may be destined for a little bit of higher prices coming into the second half of February. Markets, lower prices. Gold sitting down about $1 right now, $1 to the downside at 18.77. We put gold on a daily. It's been quite a run to the upside. If you're looking for maybe an area of gold, first area that I'd look for gold, maybe 18.26. That's the 382 of the full run higher from about 16.30 up to 19.50. It's also an area that may be an area of resistance. And that resistance, folks, lasted from December on a daily, December 1st, all the way for an entire month until basically January 1st, when this thing broke out at 18.28 up to 19.50. We're almost back to that level, 18.77 right now for the price of gold. We jumped to notes and bonds, pretty muted action. You get the 10-year off 1 tick. You get the 30-year off 7 ticks. We jump over to the volatility index this morning, the VIX. We're finally getting a spike, folks. Pay attention. For the last year, okay, anytime we've been down on this 20 mark, man, you've seen spikes. You're getting a little spike right now. We're at 21.54, a far cry from where we were 8 days ago when you had the VIX pushing a 16 handle. Not so much anymore. And as we wrap up this beginning segment, we'll jump over to the dollar index. Dollar on a daily basis. Yeah, basically inverse the gold chart almost, right? Back to the 618, 103.33 on the dollar index, up 10 ticks right now. Stay tuned. We got a lot to talk about on Friday, folks. We'll be right back after the break. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps down about 16 points to kick off the trading session in about 12 minutes as we look to the start of the trading day. And yeah, we got a few stories to talk about. How about Disney yesterday, man? Decent numbers for Disney. The reorganization from Iger. And boy, you talk about a sell-off, man, from 118. Now, the market sold off as well, folks, but Disney did not expect this thing to finish in the red yesterday after you opened about $6 higher. You were as high as $10 higher on that reorganization plan in the conference call Wednesday after the bell this morning. We're picking things up down about $1 as well for Disney at 109.55. Now, here's what I'll say, folks. Disney, longer term, stock's going to be great, man. Short term, there was a lot of expectations, man, going into this, right? Iger took over somewhere in the beginning of December, I think, something like that. Forget the exact date. Does anybody know in the den maybe the date that Iger announced that they were coming back? Nonetheless, this thing has accelerated. Coming into earnings, folks, you're talking about an acceleration of almost 30% to the upside. So a lot of optimism built into Disney. You give back a lot of those gains, but still, keep in mind, this thing's up almost 30% to kick off the year versus an S&P up 10 to 15%, et cetera. All right, we're going to stay on streaming right now. We're going to go to Warner Brothers Discovery. So quite a run for this stock, right? From what, $9 and change up to $15. You're talking about a 60% acceleration, but boy, it's been quite a free fall. From the Bill Huang saga of $78, and it was a one-way trip down to $8, $8.82. Maybe that's the bottom. And we jump over to some of the news in Warner Brothers Discovery. Now, I had to look this up. First, let's jump to the article here. And the article that I was taking a look at is that you have HBO Max introduces first price increase to stem streaming losses. It's $1 a month. They go from $14.99 to $15.99 a month. Now, what's absolutely remarkable is you think about it, right? You go to a movie with a family, folks. You go to a movie, let's say 2 adults and a child. What are you talking about these days? You're talking about 2 adults and a child. You're talking about, I haven't been to a movie in a while. What are movie tickets these days? $14, $12, $16 probably, depending on where you're going. 2 adults, that's $32. You add a kid on there, that's $40. You add some concessions on there, that's $60. That's $60 for one movie of one time. Meanwhile, HBO Max, that gets you 4 months. Putting that in comparison, tremendous value for some of these companies, especially if you enjoy some of their programming. HBO Max got some of the best programming out there. I don't imagine a lot of people are going to be canceling, going from $14.99 to $15.99 a month. That's slightly above, which is interesting, though, Netflix's standard $15.49 a month plan. Now, this all ties in because what else you have up here? Okay, now where did I see this one? Was it up on the front page? I saw the headline this morning, whether it was Bloomberg, maybe it was on the Wall Street Journal. It was talking about Iger considering selling Hulu was the main point of it. All right, let's see. Was it on the Journal? It might have been. No, maybe not. It was talking about Iger potentially considering selling Google. Excuse me, not Google. YouTube. I'll get it. Hulu. And what's interesting is that you got to follow your own intuition sometimes, folks, okay? Here it is. So Iger says he's not committed to keeping Hulu. Okay, now this is yesterday, but we didn't talk about this one yesterday. What is interesting is when Disney first came up, I signed up for the bundle, okay, which gets you Disney Plus, ESPN Plus, and Hulu. On Hulu, we were watching The Handmaid's Tale or whatever that is, pretty decent show on Hulu. What was interesting is I could never keep track of what you got with Hulu versus what you got with Hulu Plus. Seems like there was different access to different programs. It was confusing. So I had the bundle, kept it for probably a year or two, and just in the last 30 days, maybe 2 months ago, I think in the last 30 days or so, I canceled the bundle and just kept Disney Plus because, number one, ESPN Plus really hadn't used it, and Hulu really hadn't used it at all. Not surprising that they're going to dump Hulu, and not surprising that ESPN is its own entity. When they reorganize things, you have the media division, which is going to be movies and Disney Plus, right? Then you have the parks, and then you have ESPN, its own entity. Eventually, they will have ESPN that will be some type of a streaming platform or whatever it is its own right, but they make too much money right now being a cable powerhouse for ESPN in terms of what they make, so not yet. But one of the things that they talked about recently on their conference call was saying that even when they raised prices, they saw very little attrition in terms of people canceling. So what does that mean? They're probably going to raise prices again. Same thing with HBO. There is tremendous value for these companies, folks, at $16 a month. I mean, I think about HBO, right? Game of Thrones. So many great programs on there, let alone the ones that are sensational, generational, that kind of captivate society. And yeah, so it's interesting to think about HBO. Now, here's the last part that I'll say into this is that, so HBO Max is, here we go. The company plans to introduce a new streaming service this spring that combines HBO Max, which is, of course, that was the other one I wanted to talk, Succession. Great program, folks. If you haven't watched Succession, man, check it out. Absolutely outstanding program. So they're going to have a new streaming service that's going to combine HBO Max with Discovery Plus. Now, in my household, folks, there are certain fans of 90 Day Fiancé, and I had to look up what Discovery Plus is, okay, because I had to make sure it included Lifetime. A lot of females in general, not only females, but enjoy Lifetime. They enjoy TLC. They enjoy the reality television shows, right, that have taken hold in terms of 90 Day Fiancé. What's the other one? Well, they got Love It or List It from HGTV. But look at the Discovery Plus, just Googling it, man. You're talking about, look at all the networks that you can get with HBO. If you combine these two, you're talking about TLC, Animal Planet, Discovery, Discovery Plus, right? History, A&E. I'm not even an owner, folks, but it seems like a pretty good deal. And it was interesting when we were looking at the potential for streaming platforms. When you're living in 5 houses, you got 2 adults and 3 kids. We got a 16-year-old, a 5-year-old, and a 2-year-old. Okay, we span the spectrum of programs, and it makes it very difficult to lock in one streaming platform because everybody's tastes have to be accommodated. So we still have the cord, which we have not cut yet, to regular cable. But one of the toughest parts was figuring out how to get these programs in particular. So it is interesting. We have HBO already. If we got these programs, probably wouldn't need cable, which is interesting enough that those alone, because it's quite a lineup. When you combine all of those, it's quite a lineup for a household. And the other part about HBO, folks, if you're not familiar with it, is that they have Sesame Street on there, and they do have some decent kids programs. Tommy the Fourth, he's a big fan of Elmo right now. They just had Elmo's birthday at Busch Gardens last weekend. If you're not aware, folks, Elmo's birthday, February 3rd. February 3rd every year. One day after Tommy's birthday, the man turning 2. So interesting that they're going to combine those. And, when you see this type of decimation on that type of a chart, but quite a start to the year. From $9 up to 16, we're backing off to 14.37 with a negative market right now. Let's jump over to some of the other streamers and see how we're trading. As we said, Disney, well off the lows that we started the year on, but still quite off the highs in terms of almost 50%. And we jumped to Netflix. Quite a run recently, man. But you're bumping into where? You're bumping into the 382 on Netflix shares, folks. 362, quite a run, man. From 700 to 162. And just like that, we're up more than 100% off the lows right now. But be careful as we bump into the 382 on Netflix. And that's also kind of the area that you consolidated in for a couple months last year at the beginning of 2022. I was going to say beginning of 2021. Can't believe last year is now 2022. We are in the roaring 20s, whether you know it or not, folks, right? Think about for the longest time, you thought in the 1920s, the 20s, that's an ages ago, right? We are in the roaring 20s, and when my son's growing up, when your kids are growing up, they're going to be calling it the roaring 20s, man. That's where we are. We're in the 20s, the roaring 20s. All right, folks. We're looking forward to the open. We'll be back in 3 minutes. Markets kicking things off in negative territory. We'll take a look at some of the other equities moving. Stay tuned, folks. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, welcome back, folks. We got markets open, and you're catching a little bit of a lift. You're 20 points off of where we were earlier this morning. You got the Dow into positive territory in the open, up by 8 points. S&P's negative by 8. NASDAQ 100 negative by 69 points right now. And let's jump around to some of the FANG stocks. See how we open. You got Apple off about 0.5% to kick things off. Quite a week for Microsoft. Microsoft down about 0.3%. You talk about quite a week. Where is Google? Finally catching a little bit of a bid. If you like Google at 108, you're going to love it at 93. Be careful. A little bit tongue-in-cheek there, of course. Changing dynamics, to say the least, on the search arena in the Internet of Things and everything. Google up by 1.1%, maybe a little bit overdone over the last couple of days with their AI catching some heat recently. All right, what else are we going to talk about? We talked about our Disney. What do we got pulled up? Yeah, let's talk a little bit of Apple. This one was interesting. So Apple avoids tech layoffs because it didn't overhire like Google and Amazon. And when you take a look at some of these numbers, man, in terms of how many people they added, take Salesforce out of there because they're not comparable to some of these other companies in here, I think. Although you've seen they're bringing back their stock price, paying the price, of course. Apple hired more cautiously during the pandemic. Employees added during the past 3 years, okay, compared to pre-COVID levels. Remarkable, man. Amazon expanded their workforce by 93%. Meta, 92%. Google, 60%. Microsoft, 53%. Apple, 19%. Pretty remarkable when you compare it to some of those other companies. Now, you could lay the claim that Apple is more of a, not a growth company, less of a growth company, I guess you could say, in that they've reached a maturity level, which is why some of these other companies were hiring at a more elevated level. One thing that you do have to pay attention to as well, though, when they talk about that they don't need to fire anybody, okay, avoiding job cuts. I heard an analyst talking about last week on Bloomberg, maybe it was earlier this week, and they were making some great points. They said, listen, Apple's not going to fire anybody, okay, but what they are going to be able to do is they're going to be able to trim the workforce a bit by either not hiring like they were thinking or forcing people out of the workforce by doing what? Bringing them back to the office. There are a number of ways that you can tighten the belt a little bit without actually laying people off. That may be one thing that Apple employs, but you look at those numbers, man, that's all that matters, right? This signals a better quality of management at Apple compared to other tech companies. They clearly read the signals during the pandemic the wrong way. The company announced plans to shore up its human resources this week by hiring its first chief people officer. HR duties had been overseen by retail chief Deirdre O'Brien. You go, Deirdre. There we go. Another O'Brien in the ranks. So Apple gets more efficient than peers during the pandemic years. Now, this one's a tough one, because there's a lot that goes into efficiency in terms of growth, right? Revenue per additional headcount. Well, here's the thing, folks. You got like Alphabet, right? They're plowing money over the last 6 years into AI. That's not making them much money just yet. They're doing that to make sure they don't go BK when Microsoft tries to eat their lunch. So it's a different deal in terms of what you're looking at. Meta, right? Of course they're going to be making less per head count, but same thing. Zuckerberg's trying to spend, $10 billion every 90 days or every year, whatever it is, to try and create a metaverse. So not really comparable there, but you can't deny the hard numbers in terms of the percentage gain for some of these companies. So when you hear that like companies like Amazon are laying off 5,000, 6,000, over the last 3 years, folks, tremendous amount of employees added across the board for Apple. All right, we got a few good articles. What are we going to talk about, folks? All right, let's talk about Lyft first. Let's talk about Lyft first, okay? Lyft, they're in trouble, folks. They're not Uber. Uber is a word in the English language. You say, let's Uber somewhere. You don't say, let's Lyft somewhere. You don't do it. Doesn't happen. Lyft shares tumble after unexpected loss, downbeat revenue outlook. The ride-hailing company reported highest number of riders in 3 years in the latest quarter. But guess what? Nonetheless, the loss widened to almost $600 million from $283 a year earlier. For the current quarter, revenue expected about $1 billion, up from $876 the prior year, but well below 1.09. They missed by more than $100 million there. Is that right? No, excuse me. No. They missed by, $35 million. 34 to be exact. Now, projection comes after Lyft reported having 20.4 million riders, the highest level in nearly 3 years, leading to a 21% increase in revenue. Both metrics beat, okay? Quarterly results hurt by $200 million in stock compensation. November, they laid off 13% of the workforce. You're only talking about 700 jobs, though. Yeah, for those 700 people, man, couldn't be more important. But in terms of when you talk about the economy, but you take a look at the two, and this is where the dichotomy goes in. We take a look at Lyft. Okay, they're down 35%, folks. You take a look at Uber, it's down 2%. Okay, this is not an industry-wide problem. Lyft's having some problems here, to put it lightly, and I'd be very skeptical of that company going forward. Uber, completely different story, man. Uber's around for the long haul, and they're going to be making money because we're going to be paying. Yeah. That's all there is to it. Okay, this is an article I needed to talk about. Had it pulled up, I think, yesterday or the day before. Had to be yesterday, I guess, because that's when the article came out. Man, this one's a good one, folks. If you got some time, check it out. I'll put the article link in the den. How the wealthy save billions in taxes by skirting a century-old law. It's a report from ProPublica out there. They put out some great, long, big reports, folks. And what they talk about here, basically, okay, Congress outlawed tax deductions on wash sales 102 years ago, okay? Over 100 years ago, okay? Our Congress understood that wash sales were just going to be a tax scheme. Okay, you sell something, you incur the loss, you buy it right back. Well, you got to hand it to Wall Street, folks, okay? Because I didn't realize that. Are you aware that you can buy the same exact company just in different class of shares? And the wash sale does not apply? How does that make sense in this day and age? The simplest things in the world our Congress can't get done, folks. And you got billionaires upon billionaires making all the money off the taxes. And meanwhile, we're not even going to have IRS agents. That gets political for whatever reason, okay? But check out the numbers when you look at just one person. Okay. At first glance, July 24th, 2015 seems to have been a brutal trading day for who? Steve Ballmer. The Microsoft former CEO dumped hundreds of stocks. He lost $28 million. But no, what this is, folks, okay, is this is a part, and let me get down to where they actually are, and who's running it. Goldman Sachs, okay? They conducted the trades on Ballmer's behalf, and what he does is, what do you think he does? He sells them, and then what does he do? He buys them right back, two-step process, okay? Near simultaneous purchase meant he effectively had not even changed his position. Many equities out there have similar shares, or you can just employ some type of strategy that locks you back into that same amount of whether it's delta or whatever you're looking at. Tax-advantaged loss harvesting accounts. Okay, over time, the markets, as they had historically, would buoy the investments upward. When inevitably they underperformed or the whole market dipped, Goldman sells and replaces them with equivalents. So every time you get a pullback, you're incurring losses, and meanwhile, you're never actually selling. Law's been on the books for over 100 years. We're going to talk a little bit more about this because Ballmer himself, yeah, you're talking about hundreds of millions of dollars, let alone when you get across everybody. Stay tuned, folks. We got markets climbing back almost near flat territory. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&P off 16 points right now. NASDAQ 100 off about 110. We get the Dow back to negative territory off 70 points right now, and the Russell off by 10. Crude sitting at about $79. We get the gold contract down about $5 this morning. And jumping back to that article, pretty interesting stuff. Now, to get to you some of the numbers, okay, now this is a long one, folks. I posted it in the Tiger's Den. If you get a chance, check it out over the weekend. Now, just Ballmer, okay? Over and over, Ballmer sold and bought, and it's not just him. It has nothing to do with him. He has done absolutely nothing wrong. He's just featured in this article. Even Goldman's done nothing wrong, man, okay? You got to change the laws. Otherwise, why not? I'd be doing it 10 times over. We're just saying in the den, of course. Sell it and buy the comparable stock, right? Now, Goldman is employing very complex strategies as well to mimic stocks that don't have those comparable shares, but many times companies these days do have two classes of shares with different voting rights, and that somehow qualifies. Now, there's an asterisk we're going to get to later in this story. So, over and over, Ballmer sold and bought stocks in roughly equivalent amounts on that day in July when he swapped around $200 million worth. Okay? A month later, he does it again, landing at least $23 million in tax-reducing losses, similar to the December that brought 26. These are daily. That's 26 million, 23 million. From 2014 to 2018, Ballmer was able to generate tax losses totaling $579 million without changing his investment portfolio in a meaningful way. The tax savings from those losses amount to at least $138 million. It's basically wash sales, and that is what Goldman is achieving. Now, the scale of Goldman's feat was remarkable, as they say, but Ballmer was just one client. Okay, that money's coming from somewhere, folks, okay? Taxes, no matter what you think of them, they're necessary in some form. And so when somebody like Ballmer is able to skirt $138 million, because basically he's got wash sales going on where he's never actually selling positions and somehow just locking in losses and using complex financial models to have the same positions immediately, doesn't really seem fair, to put it lightly. And it doesn't really seem the intention of the law. Now, this is where it gets interesting, okay? Because even Goldman knows this, because look how they play this game. After inquiries by ProPublica, okay, now it goes on, okay? Yeah, I'm skipping one paragraph here, and there's so much in this article I wish I could talk about. We got to jump around a bit. ProPublica was able to reconstruct the tax law strategies of scores of the wealthiest people. You're talking about Zuckerberg, okay? You're talking about the other Facebook founder Dustin Moskovitz. Please, every single wealthy person should be in this type of strategy. Why would you not? You'd be a fool not to, okay? But here's the kicker. After inquiries by ProPublica, Goldman said it would halt transactions like Ballmer's Shell and BHP trades, which were the ones that used identical equities with just different classes of shares. Goldman conducted a review, okay, and said that a very small percentage of its tax investment solution trades were inadvertently made in a manner inconsistent with their strategy. The bank said it strives to provide the best-in-class investment advice to clients consistent, hear this part, listen to this part, consistent with both the letter of the law and the spirit of all applicable tax laws and regulations. What do you think their lawyers said to them, folks? What do you think they said? They say, hey, this might not be really within the spirit of the law. Yeah. Take it for what it's worth, all right? A Ballmer spokesperson, they shouldn't even have to reply. He's done nothing wrong whatsoever. He pays his taxes. Yeah, Goldman's running a fund that is very beneficial for the wealthy. And look at the numbers you're talking about, man, okay? You got the Waltons. You got the Facebook founders. You got the WhatsApp founders. You got the Facebook founders, let alone everybody else, man. It's just remarkable that this exists. Anybody could come up with a simple law that says that if you violate in the same way in terms of going against the spirit of the law by not really selling and instead just selling one position and entering in an identical position with exposure, that would be considered a wash sale. That's all you have to do. You could do it tomorrow, and they don't do it, okay? So this money has to come from somewhere, man. Everybody talks about the debt. We're going to have the debt ceiling coming up right now. And where's all the talk about this, man? Okay, but how does this get done, folks? Do you know how this gets done? To go one step further, and it stinks somehow that becomes political, is that you need IRS agents then to go after when people break the spirit of the law. And how is that not breaking into the spirit of the law when they literally have tax advantage loss harvesting when you're really not even selling a position, right? It's crazy, man. All they do is wait for a pullback. I mean, can you imagine what just happened during the pandemic and what just happened? These were from 2014 to 2018. The statistics we have here are 2014 to 2018, I believe. Okay, that's at least the statistics they were giving out there. What happened during the pandemic, man? What's going on now? Can you imagine the losses that they're locking in by not even selling? Okay. For what it's worth, the link is in the den. I'll post it in the YouTube Tigers Den as well. Check it out, folks. It's an interesting one for sure. Yeah, I know. There's like the simplest of language, but then what has to happen, Dan? We have to have IRS agents that go after it for billions of dollars, folks, which, again, unfortunately, a problem these days for some reason. All right, let's jump around to what else we have going on. We talked about Lyft. We talked about losses. Let's talk a little bit of options, man. Fear of options, FOMO. If you don't know what FOMO means, folks, fear of missing out, right? The rage. FOMO options bets sweep market during stock rally. Activity tied to Apple, Meta, and Tesla shares has touched some of the highest levels in history recently. Folks, if you haven't checked out Fast Market, TD Ameritrade, Thinkorswim, they are a sponsor. It makes sense to understand how options work in this day and age, regardless of whether you're trading them or not. Some great discussions in the den going on this morning, talking about just understanding options, pricing, where they're looking for the market. Our man Dave White does a great job talking about Max Payne, right? Where those options are going to in his newsletter, Path of Least Resistance. Nonetheless, we get to the numbers, man. More than 40 million call option contracts changed hands in a single day in early February, the highest level on record and nearly topping 2022's daily average volume for puts and calls combined. Okay? Yeah. That propelled overall activity above 68 million contracts, also a record on the CME. Options are a thing, man, and they're not going away, whether it's 0 days to expiration options, which are taking off, short-term options taking off, etc. Shares of tech and growth companies that floundered in 2022, they've accelerated higher, and traders are rushing to options that might profit if they keep soaring. Yeah, call options, of course, give you the option to buy to the upside. Yeah, and because of that lighter positioning in terms of where people are, okay, many investors sold stocks last year or made outright bets against major indexes, and as they grow worried about rising interest rates and a possible recession, people are using shorter dated call options to protect themselves against a rally. It's interesting when you go through this one as well. I'll post this one in there as well, because this is an interesting one that you should check out, folks. Net call volume, mega cap growth and tech stocks within the S&P 500. Look at that run, man. Activity in the options market ballooned during COVID, with volumes of more than doubling since the start. It has shown no signs of deflating. 46 million contracts are changing hands on an average day in 2023, 12% higher than last year. Right? Folks, do you remember what the VIX looked like last year in terms of volatility, man? Spikes everywhere to 36 to 35 to 34, and this year so far, 12% higher action in the volumes in options. Stay tuned, folks. Markets making a bid for green territory. S&P's off by just 2. Right back for the final segment.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And welcome back, folks. We got the S&Ps right now. Excuse me, down about 10 points. All the markets in red territory. Crude continuing to climb, up about $1.10, well off the highs at $80, but now back above $79. We got gold down about $5. Let's jump to currencies real quick. You got the dollar index right now, pretty much right where we kicked off the program, 103.32. Let's check out notes and bonds as we go to wrap up the hour. Yeah, pretty calm action as well. We got the 10-year right now, negative by 1 tick, pretty much where we kicked off. 30-year, negative by 9 ticks. And for some reason, sorry, my charts are stuck, I think. Yeah. Okay. What else did I have pulled up here? We were talking about, cars, okay? And I saw this headline out here on CNBC earlier. Jeep reveals its most expensive Wrangler SUV ever, topping $115,000. I said, oh my goodness. Well, it's sensational headlines from CNBC. Shouldn't be too surprised. Only 150 of them are getting made. So not representative in any way, but it did make me think, folks. I have not gotten an SUV yet, probably late to the party. I got to get one for my little man as well, running around town. But Jeep, have you seen the prices of the Jeep Grand Wagoneer? If you haven't, I think these caught my eye last Super Bowl when they made some commercials. I said, man, that looks like a great car, man. I got to check that out. I got to pull that up. Well, I pulled it up. And what happened? I said, they're crazy if they think I'm going to buy a Jeep Wagoneer for $108,000 or $88,000 at the base. In terms of where it starts. Pretty crazy. And guess what? That's 2022. You want to go to 2023? Yeah, you're talking about pretty similar prices across the board. Pretty lofty levels. Where's Jeep getting away with all those numbers? I wonder how much they're doing because Jeep, we got a lot of Jeeps around my neighborhood. Man, Jeeps are great. But in general, not a $110,000 car, right? Jeep is high end now. Yeah, I mean, isn't that crazy? Yeah, $109,900. And they look phenomenal, folks. Don't get me wrong. But you better spend, you're going to spend $110,000 on a car, man. There's a lot of phenomenal cars that you can get for $110,000 that compete very well with Jeep, I assume. Yeah. GMC Yukon Denali. You guys check those out? Those are beautiful, man. If you're in the market for a high-end SUV, man, those GMC Yukon Denali. I'll grab one of those. Stay tuned, folks. Have a great Friday. Be safe out there for Super Bowl weekend. We'll see you back Monday. Thanks so much, folks.